Bitcoin is on the verge of a significant rally. Several factors are converging to create a potential surge in its price. These catalysts include the anticipation of interest rate cuts by the Federal Reserve, evolving regulations surrounding cryptocurrency in the United States, and recent market trends suggesting growing bullish sentiment. This confluence of events has the potential to propel Bitcoin's price beyond the $70,000 mark, attracting both seasoned investors and newcomers. Understanding these catalysts is crucial for investors seeking to capitalize on the potential opportunities presented by Bitcoin's resurgence. By analyzing current data, expert opinions, and historical trends, we can gain valuable insights into Bitcoin's potential trajectory. Interest rate cuts by the Federal Reserve have historically been a boon for risk assets, including cryptocurrencies like Bitcoin. When interest rates are low, investors are more likely to seek higher returns elsewhere, pushing capital into riskier assets. Bitcoin, with its potential for significant gains, becomes an attractive option in such an environment. Lower interest rates make borrowing cheaper, encouraging businesses to invest and consumers to spend. This increased economic activity can lead to inflation, which further benefits assets like Bitcoin that are seen as hedges against inflation. The interplay between interest rates, inflation, and currency valuations creates a complex web of factors that can significantly impact Bitcoin's performance. The regulatory landscape for cryptocurrencies in the United States has been evolving rapidly, creating both uncertainty and opportunity for investors. Clear and favorable regulations are crucial for the long-term growth and adoption of Bitcoin. Recent legislative efforts aim to provide greater clarity and oversight to the industry. These regulations, if passed, could have a significant impact on how Bitcoin is traded, taxed, and used within the United States. The outcome of these regulatory developments will be closely watched by investors, as they will shape the legal and operational framework for Bitcoin. The SEC's approval of a Bitcoin exchange-traded fund, ETF, would be a major milestone, attracting significant institutional capital and further legitimizing Bitcoin as an asset class. The upcoming presidential election in 2024 is another factor that could influence Bitcoin's price trajectory. The stance of different candidates on cryptocurrencies and their underlying technology will likely shape investor sentiment. A pro-innovation stance could boost confidence in Bitcoin and other cryptocurrencies. Conversely, a more skeptical approach could create uncertainty and potentially dampen investor enthusiasm. The outcome of the election and the subsequent policy decisions will have long-term implications for the cryptocurrency industry in the United States. Investors will be closely watching the candidates' positions on issues such as taxation, regulation, and the role of digital assets in the future of finance. Recent market trends suggest a growing bullish sentiment towards Bitcoin. After a period of consolidation, Bitcoin's price has shown signs of recovery, breaking through key resistance levels. This positive momentum is further fueled by increasing adoption of Bitcoin as a payment method by businesses and institutions. The growing popularity of decentralized finance, or DeFi, applications built on blockchain technology is also contributing to Bitcoin's resurgence. Furthermore, the increasing recognition of Bitcoin as a store of value, often referred to as digital gold, is attracting investors seeking a hedge against inflation and economic uncertainty. This combination of factors creates a favorable environment for Bitcoin's continued growth. Bitcoin's price history has been marked by periods of both meteoric rises and sharp corrections. Understanding this historical volatility is crucial for investors seeking to navigate the cryptocurrency market. In its early years, Bitcoin was primarily the domain of tech enthusiasts and early adopters, and its price was subject to significant fluctuations. However, as Bitcoin gained wider recognition and adoption, its price began to stabilize, albeit with occasional periods of volatility. Despite these fluctuations, Bitcoin has consistently recovered from previous bear markets, demonstrating its resilience and long-term growth potential. This historical perspective is essential for investors to maintain a balanced outlook and not be swayed by short-term market swings. Bitcoin's value proposition is multifaceted, encompassing its use as a medium of exchange, a store of value, and a potential hedge against inflation. As a decentralized digital currency, Bitcoin operates independently of central banks and governments, providing users with greater control over their funds. Its underlying blockchain technology ensures transparency, security, and immutability of transactions. Moreover, Bitcoin's limited supply, capped at 21 million coins, makes it a scarce digital asset, similar to gold. This scarcity, combined with its growing adoption and acceptance as a legitimate asset class, contributes to its value proposition. As more businesses and institutions adopt Bitcoin, its utility and demand are likely to increase, further supporting its value. Increased adoption of Bitcoin is a key driver of its price appreciation. As more individuals and businesses embrace Bitcoin as a payment method, investment asset, and store of value, its demand is likely to surge. Several factors are contributing to this growing adoption, including the increasing awareness and understanding of cryptocurrencies among the general public. The ease of use and accessibility of Bitcoin wallets and exchanges have also lowered the barriers to entry for new users. Furthermore, the growing number of merchants accepting Bitcoin as payment is making it more practical for everyday transactions. As adoption continues to grow, Bitcoin's network effects will strengthen, creating a virtuous cycle of increasing demand and value. Institutional investors, such as hedge funds, asset management companies, and endowment funds, have been increasingly allocating capital to Bitcoin. This influx of institutional money is a significant development for the cryptocurrency market, bringing with it greater liquidity, legitimacy, and stability. Institutional investors typically have a long-term investment horizon and operate with substantial capital, which can have a profound impact on asset prices. Their entry into the Bitcoin market is driven by a number of factors, including the search for yield in a low interest rate environment and the need for portfolio diversification. Moreover, the increasing availability of institutional-grade custody solutions and trading platforms has made it easier for these investors to securely store and manage their Bitcoin holdings. This increased institutional participation is likely to attract further investment from both retail and institutional players, creating a positive feedback loop that could propel Bitcoin's price higher. The four catalysts discussed interest rate cuts, evolving regulations, the presidential election, and recent market trends are intricately interconnected, and their combined impact on Bitcoin's price is multifaceted. For instance, a favorable regulatory environment coupled with a pro-innovation stance from the newly elected administration could create a positive feedback loop, attracting further institutional investment and boosting retail investor confidence. Similarly, lower interest rates could incentivize investors to seek higher returns in risk assets like Bitcoin, while increased adoption and positive market sentiment could further fuel its price rally. However, it is important to note that the cryptocurrency market is still relatively nascent and subject to significant volatility. Unforeseen events such as regulatory crackdowns or macroeconomic shocks could dampen investor sentiment and lead to price corrections. Therefore, investors should exercise caution, conduct thorough research, and consider their own risk tolerance before investing in Bitcoin or any other cryptocurrency. The convergence of these four catalysts, anticipated interest rate cuts, evolving U.S. regulations, the upcoming presidential election, and recent bullish market trends, paints a potentially optimistic picture for Bitcoin's price trajectory. While the cryptocurrency market is inherently volatile, the confluence of these factors creates a unique set of circumstances that could propel Bitcoin's price beyond the $70,000 mark, and potentially even higher. However, investors should remain mindful of the risks involved and approach the market with a balanced perspective. The cryptocurrency landscape is constantly evolving, and unforeseen events could impact Bitcoin's price in unpredictable ways. Thorough research, risk management, and a long-term investment horizon are crucial for navigating this exciting but volatile asset class. While the future of Bitcoin remains uncertain, its potential to disrupt traditional finance and become a cornerstone of the digital economy is undeniable.